Hi, you have tuned into Kotak Securities weekly fundamental podcast. I am your host Rini Mehta. Indian stock markets closed in the negative territory last week. Indian benchmark Nifty closed 1.2% lower, while Sensex closed at the lowest point of the weekly close at 58,098. If we look at foreign investors' interest in the markets, FIIs turned net sellers this month till date and sold to the tune of rupees 2,445 crores. This was due to a couple of reasons. Firstly, the US Fed hiked the interest rates by 75 basis points for the third consecutive time to control rising inflation. The US Fed's hawkish tone on interest rates and the fear of a global recession fueled pessimism among investors. Then the rupee plunged 1.4% against the US dollar to close at rupees 80.8 per US dollar. Given these situations, we expect FPI flows to remain volatile in the coming months. Now, if we compare the foreign flows with other emerging countries, as per Bloomberg data, FPI flows in the month till date were positive for Indonesia and Philippines to the tune of 448 million US dollars and 24 million US dollars respectively. On the other hand, South Korea, Taiwan and Thailand witnessed outflows to the tune of rupees 1,932 million US dollars, 4,278 million US dollars and 394 million US dollars respectively. Okay, now I would like to share some stock picks with you. First is Inox, on which we have a buy rating. A streak of flops from Bollywood has impacted business recovery for multiplexes and raised some structural concerns. There are two things that we note. One is content volatility is not new to multiplexes, even though it is more acute this time around. Second is regional and English movies have fared well, suggesting no visible change in consumer behavior. We expect business to gradually recover. Separately, the PVR Inox merger is almost certain given the CCI's recent rejection of a complaint against it. So we cut FY23 EBITDA sharply and trim FY24 EBITDA as we model weak occupancy and ad revenue recovery. PVR is trading at 11 times FY24 enterprise value by EBITDA. And we reiterate buy rating with a fair value of rupees 2,200. Lastly, our pick of the week is Indigo or InterGlobe Aviation with buy rating and a target of rupees 2,710. Our assessment of the trajectory of yield and cost as well as new competitors bodes well for Indigo's spreads from here on. Travelers are getting comfortable spending on air travel and are looking beyond rail travel even for travel booked much in advance. So renewed competition in air travel is failing to make an initial impact. The decline in jet fuel prices globally may not get passed on to end customers. And we maintain buy for a positive surprise against our rupees 0.4 and 0.5 RASK CASK, that is cost per available seat kilometer and revenue per available seat kilometer estimate for FY24-25. So guys, that's all for today. See you again next week. Signing off. Thank you.